So thanks so much for coming again. My name is Brad McDonald. Brad McDonald had a farm. I actually farm about an hour and a half north of here in northeast Iowa in Delaware County. And really what we wanted to focus on with this session, it's 45Z connections, but I always like to have these sessions farmer focused. And I think this panel is a fantastic representation of what farmers can be looking forward to while we're in this waiting period. And then talking to farmers over and over on 45Z, I feel like farmers in general are a little jaded and just in this waiting period, just wanting something to happen and getting promise after promise after promise and under-deliver, under-deliver, under-deliver. I think there's this stagnation when it comes to farmers' perspective on this, and the attitude is, I'm just gonna wait. I'm just gonna wait to see how it all plays out. And that is really not what we would recommend at Continuum Ag. We would advocate that you wanna be proactive. And specifically, what can farmers be doing? And I think that this panel is gonna be really great in trying to talk through what does this mean with or without 45Z, but also just a self-education when it comes to a farmer's perspective to understand what's this process even mean? What do I have to do? What are the steps needed for farmers to take advantage of this during this waiting period? So I'm happy to introduce here, start off with Paul Neiffer here of FarmCPA to kick us off. So come on out here, Paul, and we'll go from there.
Thank you, Brad.
Yes. All right. Paul, if you want to introduce yourself and get us kick off.
Yeah, again, I'm Paul Neiffer. I actually grew up on a wheat, dry pea, barley farm in southeastern Washington State. We call all of you out here flatlanders because we actually had some 60% slopes. My dad actually flipped a combine. Didn't kill him, but it was interesting. He was stuck with a throttle lever through his leg, crushed under a cab, and EMTs finally handed a hacksaw to my dad, and he hacksaw himself out of the cab, out of the combine. And I told that story to a person from the city a couple of years ago, and the guy goes, "Your dad had to cut off his leg?" And I go, "No, he just had to hack off the throttle lever." But I've been a CPA for 40 plus years. About 16 years ago, I started a blog called FarmCPAtoday.com at that point. Now, since I retired from CLA, Clifton Larson Allen, about 3 years ago, I have a new blog called FarmCPAReport.com. If you're interested, I would certainly suggest taking a look at it. But I blog, I write, I teach, I probably teach about 2,000 CPAs and other tax preparers every year on farm taxes, including last year and the year before. We talked about 40B, Section 40B, and Section 45Z. So that's a little bit of my background. I also do a column for Top Producer magazine and also do their podcast, which I think in the next week or two, I'll hit 200 episodes. And I know that Mitchell's been on the podcast 2 or 3 times with me. So that's a little bit of a background.
Fantastic. And I know one of the things that we wanted to ask you about, and we'll get into it in our panel with all of them, but as far as non-45Z tax implications, is there anything that you would like to highlight for the farmers? Obviously, the waiting period for 45Z continues,
yeah.
But what are the other things that farmers can be doing from a tax policy perspective?
Well, certainly we know right now there's one big, beautiful bill sort of winding its way through Congress. If this does pass, likely there's many provisions that are going to be very helpful for farmers. I think probably 3 key ones. 100% bonus depreciation starting January 20th of this year, going through the end of 29. If the Senate gets this way, it'll be permanent, which would be helpful. Then the Section 199 Cap A deduction that right now is an extra 20% deduction that farmers get is actually going to be boosted up to 23% and made permanent, because that was going to expire at the end of this year. And I think for a lot of the people in the audience, the lifetime exemption, which right now is around 14 million, not quite, but it's pretty close, but it's going to drop in half starting January 1st. You know, if this bill goes through, it'll be 15 million permanent, indexed to inflation. So those are 3 of the key ones. There's many, many other provisions that would be helpful, but I think those are probably the top 3 provisions for most farmers.
Well, wonderful. We'll go ahead and have you take a seat over here and introduce our next panelist here. Jack Sodak from EcoEngineers, working directly with Jack here for probably the past year or so. And EcoEngineers has been our third-party verification party. So for any farmers that went through our CI certification. There's a high likelihood that Jack has seen behind the curtain as far as the data that's necessary to actually get certification happening. So Jack, happy to have you here, and go ahead with your introduction.
All right, cool. All right, sorry about that. Yeah, as Brad was saying, my name is Jack Sodak. I actually grew up not too far from here in Mahaska County, and went to school up the road here at University of Iowa, although I feel like I'm surrounded by a lot of Iowa State people. But no, as Brad was saying, so a little bit of my background is spent about 10 years as a financial auditor at a pretty big bank, and then here in the last 5 years, I've been a lead verifier at EcoEngineers. We're a third-party qualified verifier. I can get into that a little bit during the Q&A, but we've been qualified to do LCFS verifications, ISO 14064-65 verifications, RFS, the renewable fuel standard verifications. So kind of qualified across the board, and then more specifically, about a year ago, we teamed with Brad and Mitchell to verify the topsoil program, the CI scores of the farmers participating in the topsoil. A lot goes into that. A verification plan, data collection, data review, a site visit out to the farm, just reviewing all of the farming practices to get that low CI score. I mean, I could go on and on, but we can save that for the panel. But
yeah.
So essentially, that's what we do. We're a third-party verifier, and we verify that CI score. So.
Absolutely. All right. Well, looking forward to catching up with that as well. All right. Our last panelist here, Molly Stevens from Mickelson and Company. Basically, Mickelson specializes in what happens to the tax credits after they're verified. So obviously, there's a lot happening with what actually happens with those tax credits, and so Molly's going to be our expert here talking about that today. But we'll start off with introduction, and also it looks like you've got some slides for us. So.
Yeah, perfect. Thank you, Brad. Can everyone hear me all right?
You might need to move it up a little bit more, I think, here.
We'll try that. A little bit better? Okay, hi everybody. My name is Molly. I work for Mickelson and Company. We are a tax credit brokerage and advisory company. We have been working in federal transferable tax credits for the last 20 years. The first and only federal transferable tax credit was in the railroad industry up until the passage of the IRA. So we have been working in that. We have a large buyer base from that railroad tax credit, and so the transition over to renewable energy has been a really fun one. I work on the renewable team, specifically focused in ethanol and renewable natural gas. We work in both the investment tax credits associated with those industries as well as the production tax credits, and 45Z specifically, which is what we're here to talk about today. So I just wanted to take a few minutes and kind of run through what the transfer market is looking like right now. We currently see tax credits pricing in between 90 and 94 cents, and that is very dependent on a few things. So the credit size, as you get higher in credit amount, the pricing goes up. Just the nominal dollar savings for a tax credit buyer increases as you get higher credit size. The insurance and strength of balance sheet plays a big impact as well. Insurance, we typically see pricing up maybe a point or a point and a half. And then, the strength of balance sheet obviously plays a big part. We try to time all of these towards a buyer's quarterly estimated payment. Their return on investment on these tax credits, if we can time it up to their quarterly estimated payment, is just explosive. So we really try to time it up for that, and buyers typically tend to pay a little bit more if we can time it up like that. And then the total dollar volume, and if you have, obviously 45Z strip of 3 years, you might get higher pricing if you can commit all of that dollar amount. We are seeing a lot of buyer hesitation right now with the Big Beautiful Bill. As Jeff mentioned earlier, there's a lot of uncertainty, the longevity of these credits, what it's looking like with transferability. As was mentioned, the transferability provision in the bill that was passed by the House goes away after 2027 with the extension of 45Z through 2031. So there's a little bit of hesitation right now if we have to switch to tax equity. A lot of these ethanol plants will not be able to use the full amount of the credit generated if it stays as is for the extension years. So there's just a little bit of hesitation right now on that. And then every buyer has their own buy box, the risk tolerance they want to take and the size they'd like to take. So super quick, I'm just going to run through this, but this is kind of our process for transacting these tax credits. So the first step obviously is to engage with someone like us. We will go out to the market. We have, like I said, a large network of buyers that we know their buy box, we know their risk tolerance. So we will go out and market the credit to those buyers. We go into a term sheet, negotiation, and execution. After that, you need to have all of your documentation ready to go for due diligence purposes, both with insurance, if that's necessary in the transaction, and with the buyer. So that includes a tax opinion, any insurance negotiations and underwriting, your CI calculation and verification, and then like the ethanol plant's production for the year, their prevailing wage and apprenticeship compliance, all of that needs to be documented with a high level of detail. So we go through all of that. There's also a registration number that needs to be filed for and that you include on your tax return for that applicable year. Both you and the buyer include that on your tax return, so that's a key part of the process. We go through the due diligence, we execute the transfer and purchase agreement, and then we close and fund on a quarterly basis to time with those buyer estimated payments. So at a very high level, that's what we do. That's how we get all of the ethanol plants their money. We are currently negotiating some 45Z transactions. Like I said, a lot of hesitancy right now, but we do have a number of buyers interested, and we expect to start closing on some of those transactions in the third quarter. So thank you so much. I'm happy to be here and excited for the panel to come. So.
Wonderful. Well, thank you so much, Molly.
Yes.
Paul, we'll start with you here as far as what is the latest you are monitoring with 45Z?
So the latest is it's a muddled mess. I think that's probably the best way of saying it. Again, as Jeff had mentioned in January, the 3 agencies, and that's part of the issue here. You don't have one department of the administration dealing with this. You have the Energy Department, you have the Ag Department, and you have the Treasury Department, and all 3 of them have to cooperate in order to come up with any guidance. And they sort of, actually the guidance was supposed to be out before the end of 2024, and they were only about 3 weeks late. So for the administration, that was pretty good. So that's still where we're at. I mean, we saw that USDA did come out with a calculator. Mitchell and I have talked this over on a podcast, that the calculator really is about maybe 30-40% where it needs to be. It doesn't take into account any benefit if you increase your yield, if you use manure, other practices. So, and also Jeff had mentioned that we have a new administration. I think this administration is not even interested in doing any type of guidance until we see what happens with the One Big Beautiful Bill. So we're likely at the earliest probably going to get some guidance, if we're even lucky, 4th quarter of 2025, but I think it could even go into 2026. So that's sort of where we're at right now.
Excellent. Molly, this next question would be for you. Could you just, from a broad perspective, what is a tax credit buyer looking for when they're buying these tax credits? And almost think of it as far as what is the gold standard? What are the things that are necessary in order to have these tax credits actually be valuable?
Yeah, I think the biggest thing that a buyer is looking for is those key diligence documents. So a tax opinion from a CPA firm or a law firm. The big one is the calculation of the CI score and have that be verified. And if we get some climate smart ag practices included in that, having all of the farmer documentation up to snuff and easily accessible and easily reviewable is going to be a big one. The other thing is whether they want insurance or not, and the strength of balance sheet are kind of the key points. So.
That's a great segue to you, Jack, as far as, so now we know as far as what the gold standard is for the tax credits, but in order to get that verified, it starts at the farm gate. And to understand what does a farmer have to do in order to even develop these tax credits, I think is probably the number one question on farmers' mind. We've been through it. We're the first company to actually issue CI certificates, but that was hand in hand with EcoEngineers. So just kind of walk us through what this past year has been like going through the actual certification from a farmer's perspective.
Yeah, exactly. Thanks, Brad. That was a good segue, Molly. EcoEngineers, we're not really the tax experts, that's probably you guys, but we are the verification experts, and we're ISO 14064 and 65 certified, and that certification is required in the 45Z proposed bill. And we worked closely with Continuum last year. We created a MRV protocol that stands for measurement, reporting, and verification protocol. And that's really a groundwork, because 45Z obviously is not finalized, but we use our ISO principles, reasonable assurance level, a 5% materiality error threshold, and we use that as a basis for which to review and verify the CI scores of participating farmers. And that MRV protocol is a very solid groundwork for which CI scores can be verified. And it can also be malleable if and when 45Z changes and or whatever the proposals, the final regs are. To answer your question more specifically, lessons learned last year, document. There are really about 5 or 6 data inputs into the GREET model that really affect the CI score. Your fertilizer and nutrients used, whether you use cover crop or not, your tilling practices. We, as verifiers, just need to see that documentation all the way through, whether that's your as-applied maps, your farm data, machine data, any farm log records that you guys might have, and of course, participating in the topsoil program, it goes through a second and third level of documentation there. So, Was there? A good chunk of what that verification. It's a weeks-long verification process. Can be a couple months actually, and a verification plan, data collection, data review. That's really the crux of it. Reviewing that CI score. A site visit is involved. We go out to the farm. We just verify that the practices on that particular field that were reported in the topsoil CI, were there. Yes, you put this down. You didn't cover crop this field, something like that.
Yeah, and just to add some color to that, because I went through it myself, it's not as painful as what the perception might be. Specifically, when we're doing those farm site visits, it's an audit protocol. So basically, if you are selected out of the program, and I can't remember what the percentage is that you ended up selecting, is either 5 or 10%.
I think it was like 6%.
Yeah, ended up 6% for us. So 6% of the farmers that participated in CI certification were selected for those on-site visits. And the on-site visit really came down to just going boots on the ground, seeing the farmland, and of course, after harvest has already happened, there's not much to verify, but we look at the machinery and basically just make sure that, to the best that we can, that farmers did what they said they did. And at the end of it, it ended up being very smooth, and what ends up happening is EcoEngineers then puts their stamp of pass on the program in its entirety. So that was what the CI certification was. We called it Tranche 1, where Continuum was the first ones to do it, where EcoEngineers gave that stamp of approval pass for the whole program. So every farmer that was in that Tranche 1 got to be part of that. So pretty exciting to be having that collaboration with EcoEngineers. Oh my goodness, the questions are piling in. All right, can you explain the rationale behind eliminating or phasing out 45Z tax credit transferability? I'll leave that open-ended for all three of you. Anyone?
Well, I think it's pretty obvious. You have Republicans in both the House and the Senate that don't like the idea of transferability. Remember, this is brand new. It was brought about because of mostly brand new, other than for the railroad. It was brought about because of the IRA Act, and that has a bad connotation with the Republican side. So again, we're getting whipsawed. And even if it does expire after 27, if we get a new administration in the White House and in Congress in 28, 29, it may come flying right back in. So just because it's going to expire after 27 doesn't mean it's permanently gone. Matter of fact, I would say it's definitely not permanently gone.
I think the only thing I would add is, transferability has made it so much easier for a lot of companies that wouldn't have been able to utilize the credits before to be able to realize those benefits now. So if you're generating at a smaller level, maybe $2 to $10 million, tax equity deals just don't make sense. They're too complex. They take too much time. You're locked in with a partner for years. Versus transferability, you can realize the benefits at the smaller level a whole lot easier. So we do credits ranging from $200,000 up to $50 million. At the $50 million level, it makes sense to do a tax equity deal at some point. But if you have a $500,000 credit or even a couple million, it just doesn't make sense. And so I think it's hard to know exactly what they're thinking, but the thought could be like it's saving costs because those won't be utilized, and that really hurts small producers of the 45Z credits, but also small solar or small combined heat and power systems or small digesters. It really hurts the small developers.
And Brad, to add on one thing, I've gotten multiple questions from farmers or other taxpayers. Hey, I want to buy these credits. I want to take advantage of that because it's a nice benefit. I'm getting a little bit of a savings, paying 90 cents for something, I'm going to get $1. But you got to remember, as an individual, unless you're unless you have a bunch of passive income, which most farmers or taxpayers don't have passive income, these credits are basically worthless. They can only offset passive income. They can't offset the income from your farming operation and so on. So it's really for C corporations that have a lot of tax liability that they really effectively are able to use these credits.
That tees up a great question here from Molly, explaining why Mickelson and Co. would make things easier for farmers to participate. Because I think from a farmer's perspective, this is daunting. So how can Mickelson actually help the average farmer participate in something like this?
Yeah, I think being able to realize these cash gains rather than have it, these credits be distributed out to all of the partners of an ethanol plant, it actually realizes the benefit of the credits versus, if you're carrying it on your books for the next 20 years. We make that process as easy as possible. It's long and complex, but we try to streamline the process as much as we can. We have great relationships with EcoEngineers and other CPA firms and the insurance markets and all of the things to streamline the process as much as we can.
All right, have a question here, and I'll toss it up to all three of you. With the delays in 45Z, is there any talk about the program being pushed back and not apply to 2025 production, therefore making the 2024 crop basically obsolete? Tough one.
Can you guys hear me? Yeah.
Yeah.
I will say this, not going to speculate on, again, what Washington's going to do, but specifically with the MRV protocol that we've written in conjunction with Continuum. That's kind of the nice thing with the MRV protocol. As I said, it literally lays the groundwork, and it can be malleable, kind of depending on the outcome of 45Z. What we've really done is built a robust verification system to verify that CI score and that greenhouse gas emission claim. And so I'm not going to speak to the final outcome of 45Z, but in terms of the CI score that ECO is able to verify in the topsoil program, you can kind of take that to the bank that is a solid CI score and can be utilized however a farmer would like to utilize it.
Well, from a practical matter, there's nobody at the IRS to audit these things anyway, so producers are going to go ahead and take advantage of what they think the law is and go ahead and do it. So, Again, I'm being a little facetious, but not really.
Yeah.
Your chance of being audited by the IRS right now, I'm probably going to get booed. It's the same as the Iowa Hawkeyes winning the national championship. there is a chance, it's just not likely. I think pick on the Cyclones.
I was going to say, I think there's a lot in this room that are okay with that, but springboarding as far as just how detailed does the farmer data need to be for that certification and for there to be rock solid tax credits associated with that? That probably is more for Jack and Molly here.
So like the tranche one that we worked with last summer, when it comes to like crop and yield data, we're looking at crop insurance records, USDA farmland records, your farm ownership in terms of your farm size. We're looking at as applied maps, my John Deere, things like that. When it comes to what's been applied to your field, certain types of cover crop or nutrients, we want to see the invoices, your purchase records. Ideally, we would also like to see a farmer operation log, for lack of a better term, of just memorializing, on this date, I put down this cover crop, or over this course of time. So we just really need to detail that level of verification of farm practices. So really, it's that, and if folks are participating in the topsoil CI program, the documentation which you would be submitting for that really would be pretty sufficient for ECO's review. And if not, and if you were selected for an audit, that's where we have a back and forth. We have something called a log of issues. That's just a fluid documentation. If our verification team decides that we need just a little bit more documentation on this farming practice, we reach out to Continuum, and we are able to, at least last year, we were able to get all of that documentation.
The only thing I would add from our side is, based on the regs that are out right now, there is a safe harbor if you are using an EcoEngineers or another verifier that has the ISO certifications, and so we rely completely on what they say. So whatever he's got that's sufficient is what we need and what buyers are comfortable with. So.
All right, have a question here. How does the ethanol producer cover the liability of the certified CI score if there was fraud?
Usually there's indemnifications built into the agreements as to who's going to pay for that. That's also the insurance. I think Molly can probably answer that better than I can, but I know typically there's going to be all these types of indemnifications between the buyer and the seller in regards to that type of issue that might arise.
Yeah, the insurance policies on these have exclusions, a certain number of exclusions, and those include fraud, misrepresentation, if you don't file your tax return properly. So that would all have to be covered by an indemnification or a parent guarantee, in which case you would owe the buyer back the amount of the credits that they purchased from you.
And some of these credits, not necessarily 45Z, they have recapture periods, so they have to be in place for 5 years, can't have a transfer. So that's all going to be part of that agreement.
All right, what type of fertilizer practices are required or beneficial for a lower CI score? Jack, this is probably a good one for you. Specifically, are nitrogen stabilizers involved?
It's been a while since I've looked at the GREET model, but short answer is yes. Aren't there like 6 or 7 different inputs on the GREET model for the different fertilizers?
Yeah, and specifically it'd be the type and amount.
Okay.
Yep.
The amount, trying to revisualize the GREET model there, you've got the volume that you're applying and the rate of application, and each particular fertilizer there spits out kind of a different CI score. I haven't looked at, we've got a table, a cross table, showing kind of the nutrient and then the CI score tied to it. Sorry, I don't have that exactly on me right now, but we do have that back at the office.
I think
Isn't this a case where shit is good?
Yeah, that's what I was going to say. As far as it really depends on the model that you use. So if you were to use the USDA model that they put out in January, they exclude manure benefits. Yeah. And so if you were to use that model, it really comes down to they have timing as opposed to amount or type as the important factor for what changes your score, versus the GREET model takes more into account the type and the amount, and manure being the best of all. So really the trifecta of things that impact a CI score overall: cover crop, tillage practices, and replacing synthetics with your manure. That's how you would get a -21 that we saw earlier today. So those are the key things.
And that's due to the fact that manure is a byproduct, just like used cooking oil is a byproduct, so it's going to have a lower CI score potential.
Yep. Kind of springboarding off of that, and all three of you feel free to answer, the issue of book and claim versus mass balance. For CSA farming, is it something that's being discussed? Any ideas, latest and greatest there, and the implications, if you guys have any opinions on that?
Well, certainly I think all the organizations out there trying to promote book and claim where you're able to, if you're in, I'm from Washington State, the nearest ethanol plant's probably 500,000 miles away. If I grow, good corn, a low CI score corn, using book and claim, I'm able to get value out of that. So, so I'm sure we know all the organizations are pushing that.
Absolutely. Another question, probably for Jack. Do I get a CI score per acre, by field, or farm? Do we have multiple farming practices and operations on different farms? How do you balance the vastly different practices on all of the acres? So think of farmer doing a whole bunch of different practices on a whole bunch of different fields. How can we wrap all of that up, and what does that process look like?
Yep. So, last year as part of that selection process, because we selected like 6% of participating fields, we were reviewing the CI score on field specific. So if we went out to a farm, you might have 21 fields, but if 4 of your fields are enrolled in the topsoil program with the CI scores, the GREET model, you fill out a CI score for each field enrolled and each practice in that particular field. So it's not farm-wide, it's field-specific, and again, it would be the specifics, nutrients, tilling, no-till, that kind of stuff, manure, no manure, on that particular field. And this is where those as-applied maps come in, a physical tour of your farm to go to the exact field, to use GPS location, things like that, to go to the appropriate field, to look at the practices that were stated in the CI GREET model. And so, yeah, it's on a field-by-field basis.
Yes. Now, we have to be careful, because that's the GREET model. If we look at the proposed regulations from the IRS that deals with the actual credit that the ethanol plant can qualify for, they're doing a global. So you as a farmer, if half of your fields are really low CI and half of them are different practices, you have to blend it together. So yes, the GREET model is good in that sense. And that's also, do we then down the road have you create a new LLC to only farm the fields that you're actually going to take advantage of the credit? Which again, that's the last thing we want to do. Even as CPAs, we don't want you to have more entities. It's just not practical.
And yeah, just to piggyback on that, so what EcoEngineers, what we're verifying is the CI score and the farm practices of the fields enrolled in like a topsoil program. That's our narrow scope. And then what Continuum or a participating farmer or their tax advisors do from there is, and so we are verifying the CI score on the specific farming practices of enrolled fields, just to be clear.
Yep. We are almost at time, so I think that what we want to do kind of finish up as far as general takeaways, but specifically for Paul, if we want to start with you, what are non-45Z policies that farmers should be paying attention to, like stepped up basis and death tax? And then we'll just work down the line as far as any key takeaways that farmers should be focusing on going forward from this.
Yeah, so I think I sort of covered that a little bit, the introduction, but certainly on step-up basis, we know a few years back the previous administration wanted to force you to pay a tax, a transfer tax to keep them step-up basis. Well, that's not going to apply in this administration, so that's good. But I think certainly we know that this administration or this Congress, because remember Congress writes the law, is not as in favor of a lot of these credits, but this administration, this Congress may only be around for another 2 or 4 years, so it can certainly flip-flop back the other way. So I wouldn't be too concerned that all this is going to disappear. It's just going to be a muddled mess.
Excellent.
A key takeaway from the 45 or from the CI score verification project that we worked on with Continuum last year is, so as a verification body, we're ISO certified. That's an international standardization, and ISO is very big on documentation and data collection. And so the earlier and the more you can memorialize your farming practice, even if it means taking a photograph of your field before you till it. I know that might seem silly, but if we've got that photo, we geotag it, we've got the time and date, that is a way for a verification body to verify your claim. And that's what a GREET model is you are claiming a certain CI score and your greenhouse gas emissions. And so it would help verifiers a lot if we can just verify the memorialization of your practices, whether it's photos, whether it's invoices, whether it's proof of purchases, things along those lines. And the earlier you can collect that data and get it uploaded, in this case in like a topsoil, it would just speed the whole process along.
Yeah.
Yeah, I don't have a whole lot else to add other than, keep documenting all of your practices. In the event that the USDA model or some other farming climate smart ag practices are able to be included in the 45Z calculation, the earlier we can have all of that, the better, so that the ethanol plant can transact and they can pass on those tax benefits to their farmers. So that's all I would add.
Wonderful. Well, just a tiny bit over time, but thank you so much for our panel for being here and lots of great information. So have a give them a hand.
Thank you.
You guys can go that way if you want. Yeah, you can go.